Hi, my name is Alex Hurley with GustonShow.com. So you've heard of mortgage insurance and you've heard of hazard insurance. You've heard of insurance. You need insurance. So let me give you the skinny on it. So there's two types of insurance. If you're going conventional and you're putting less than 20% down, you need something that's called private mortgage insurance, or PMI. That insures your mortgage in case you foreclose. So that's required by the lenders. If you go FHA, it's required no matter how much money you put down. So PMI is required on that loan. So that's one type of insurance you're going to hear about. Now, homeowners insurance is also required. You're borrowing a house, you're borrowing money to buy a house where it's really the bank's house until you pay it off. So the bank wants to make sure that that house burns down, there's insurance to pay for it to be rebuilt. It is required. If you somehow cancel it after you close, they will force the highest rate insurance you've ever seen in your life on you. So don't try to pull that trick. You've got to pay insurance. It's part of the deal. So hazard insurance insures the house from burning down. It's also called homeowners insurance. And then there's private mortgage insurance, and that insures the house if you foreclose with the bank. That's the bank's insurance. The hazard insurance is for if the house is damaged while you're in it. So keep in mind those two types of insurances, and don't get them confused. They're both required in most instances, unless in a conventional loan you put 20% down or more. Conventional does not require PMI, but it still does require the hazard. So remember that. People get confused on those terms. If you have any questions, give me a call, 630-915-7550.